It's the last midweek edition for the year 2021. Welcome to Business Morning on Channels Television. I'm Imi John Mekwa. Well, let's start in the oil space. U.S. oil rose for a sixth consecutive session today, while Brent gained more ground with a broad-based rally in global markets supporting prices. The benchmark Brent crude rose 23 cents at $79.17 a barrel, while U.S. West Texas Intermediate crude added 21 cents to $76.19 a barrel. A delay in Britain and France on imposing more COVID curbs before the year end excited investors as the worst fears over the impact of the variant that Omicron may have subsided. Investors have returned to risk assets. Oil prices were underpinned by three oil producers declaring force majeure this year on parts of their oil production because of maintenance issues and oil field shutdowns. And in Nigeria, the currency in circulation in the country rose from 2.97 trillion naira at the end of October to 3.15 trillion naira in November. And that's according to figures obtained from the Central Bank of Nigeria. At the same time, the CBN data show that currency in circulation increased to 2.84 trillion naira in September from 2.78 trillion naira in August. It further shows that currency in circulation stood at 2.83 trillion naira in January and 2.78 trillion naira in February, as what was at 2.81 trillion naira in July, 2.74 trillion naira in June. Well, after the break, as we end the year and look ahead to the new year, how should states be strategizing or re-strategizing to increase revenue in order to meet up with their budget and other responsibilities? That's our first discussion on Business Morning here on Channels Television. Join us again. The National Bureau of Statistics has reported that the 36 states and the Federal Capital Territory recorded 849.12 billion naira in internally generated revenue in the first half of 2021. This shows 39% increase year on year after the COVID pandemic impacted revenue generation last year. Well, this is base year effect, so it may not be so much to celebrate. And now that many states have passed their budget, let's see how they can boost their revenue to meet up with this responsibility in 2022, especially because the Debt Management Office has stated that domestic debt owed by states and the Federal Capital Territory rose to 4.2 trillion naira at the end of the third quarter of this year, compared to 4.12 trillion naira in the second quarter. Well, joining us to discuss this is the former Commissioner of Commerce in Ogun State, Otumba Bimbo Ashiru. Good morning, sir. Thank you so much for joining us.
Good morning, Ine. Thank you for having me around the morning and compliment of the season.
Wish you the same. Wish you the same, Mr. Ashiru. So let's start with, would you say that states have recovered in the area of revenue generation after last year's shock by COVID-19?
Well, if you look at the statistics, 2019 and 2020, you could see that some states actually made some money, they made some revenue. I mean, they made about 1.3 trillion pounds naira in that year, and then as against 1.33 in 2019. And the point here is that whether there is pandemic, whether there's COVID, we definitely very well. It's the fact that if the pandemic, how we can generate revenue. And the point is this. We need to focus on something which we are trying to shy away from. And we must become a true federalism. The states must run like a mini country. And that's what we need in Nigeria today. And the states must generate their own revenue internally and look at how things can be done. They must look internally. And I mean, I served for 8 years and I know what it is. So you must look at areas where you can generate. But one thing that is very key, you can only generate good revenue if you create the necessary infrastructure for people, for the industries, and for the people that are going to pay this tax. Because generate IGRs, funds are coming from tax. And I will tell you this, if you look at how things are done, you find out that even some of the states, they have no idea of what they are doing. Some states are not Bible. there are only 10 states, top 10 states that are doing very well in this country today. You take, for example, Lagos, 2000. You have Delta, you have Ogun, you have Kaduna, you have Kano, Oyo. So some of these states are doing very well. So the point here is that how will the state survive? We must get something right. I laugh at people when they are agitating for more states. Some states are not viable. Some states are making 7 billion in a year, and their expenses to pay staff salary is more than that. So their liquidity ratio is big. So the point is that how do we do that? And we get to a level in this country whereby states must run like a country, mini country. And that brings me to how things that, if you remember Rubens, the owner of Rubens, he was the mayor in America, in New York, and it transformed New York. We must get to a level, because this is a chain and it works together. We must get to a level whereby we must start having the right caliber of people to run the states. Because I'll be honest with you, some state governors, they don't have an idea of what they're doing. They don't even know what they're going to do. We're not prepared for it. So the point is that we must get people who are willing, people that are comfortable in their own right, that are not willing, because there are so many leakages in the state. It's not like revenue. Forget about COVID. Many leakages, funds that are supposed to go into the state are going to the private pockets. So those are the things we need to look at. It has nothing to do with COVID. Yes, COVID affected everybody all over the world. But presently, what we are looking at, how do we, because you make the best out of the bad situation. In this pandemic period, you can see that so many people are making money. Medical areas, they are thinking out of the box. How do we do this? How do we do that? And even some of these states are being supported by companies, CSR, to help them out. So the revenue we are talking about has to do with how do the managers, and it's leadership. If you don't have good leader running the state.
All right, Mr. Ashiru. All right, but when you talk about states running as mini countries, can you hear me, Mr. Ashiru?
Yes, I can hear you, yes.
So when you talk about states running like mini countries, a lot of governors would bring up the issue of exclusive lists. So some of them have mineral resources, solid mineral resources, and some other, and then these things they don't have control over because of exclusive lists. So some of them have said that these are some of the things that have deterred their efforts to maximize revenue generation in their state.
Well, I will tell you this. If you look at the exclusivity we are talking about, mineral resources, you are supposed to be paid some premium. And let me tell you this. Most of these things are in the Constitution, because what they are trying to say is that, okay, well, oil and everything, the federal government will do this and they will have to sort it. But you see, there is a way, whether mineral resources or not, you even have, let's forget about mineral resources. I will give you a good example. When I was in Ogun State, mining, you see, Ogun State has the largest resources for cement and limestone. They can. Look at Lafarge. Lafarge has been in Ogun State for almost 60 years now, and they are still mining. But the point is this: there's a royalty you pay to the federal government. I will give you an example. 35% of the revenue generated then was from Ogun State. But Ogun State is being paid back out of the money. But the point is that how judiciously are the states maximizing what they have, the resources they have? Forget about natural resources, mining and everything. But you take, for example, Lafarge. Dangote moved into Ogun State. Lafarge is in Ogun State. And they pay their taxes. The income they pay, the taxes they pay, the revenue they make, they still pay income to the state government. I know that, you charge them what needs to be charged. The issue of the natural resources exclusivity is something that is a constitutional issue that will need to be resolved. But having said that, some states that they don't have mineral resources, how viable are they? What I'm saying in essence is that you can focus on agriculture that will lead into industrialization. What I'm saying is that, assuming what we are saying is that we depend so much so much on the federal government. Because I said, states we should focus on, we should become a true federalism, a country whereby the federal government will focus on all the major things like airport, the soldiers, the Navy, police, and the states will have their own state police. So you see, by the time you are generating this revenue, you'll be paying just premium to the federal government. So the point here is that whether the exclusivity list of states, they fought it and they won the case. For example, Lagos State were not getting any funds from the federal government, then they were making money. Tell me the mineral resources they have in Lagos State. But Lagos State is a commercial center.
Okay, I think do we have Mr. Ashir back? Okay, Mr. Ashir was just telling us, in fact, challenging state governors or state governments, to look inwards and try to maximize what they have, talking about agriculture, solid minerals. And for him, it's not an excuse that we have the exclusive list, which a lot of governments will say has been a deterrent to them, to maximize some of their natural resources. We'll just take a short break. We'll try and get Mr. Ashiri back to finish up his thoughts. We'll take a short break and then we'll come back to conclude this conversation. Well, I believe we have Mr. Ashiri back now to finish up his thoughts just before we end this segment. Hello, Mr. Ashiri, are you back? Can you hear me? Can you hear me, Mr. Ashir?
Yes, I can hear you.
Okay, all right. So you were about to finish up your thoughts. I perceive challenging state governments to maximize their comparative advantage.
Yes. Can you hear me now?
Yes, I can hear you.
Yes. What I'm saying in essence is that the problem is that state governments can still make the best out of the bad situation. Whatever it is, you can still generate right income, necessarily for your state. Because at the end of the day, things will feel, if you think out of the box, you make something out of it. That people will tell you, when I was in the banking industry, you must squeeze water out of a stone. So the state must be able to do that. And let me tell you this, as a governor, when you are going out to campaign, you must have an idea of what you're going to do, because you know the problem on ground. So how do you solve that problem? So that is what we are telling people that are going to do. So when they get there, they do something else. Their focus is on something else. So my own point is that we must now start bringing people that have the right caliber of people that we want, even local government. Because when I was talking about true federalism, mini country, look, when we were growing up, local governments were very powerful. When you look at local governments, they were very powerful. I remember where I come from, Ogun State. The chairman of local government there was Chief Bishop Anabanjo, who has distinguished himself in his serving career. And he came in and he was able to turn things around. He had his focus. But nowadays, different kind of people are now local government chairmen. Then you have state government too. So the local government must be powerful, the state must be powerful, because they are not going to be generating income. Look at the IGR we are talking about.
Okay. Mr. Ashiri, you talked, from the onset, you've been talking about, getting the right people in there. So, of course, this takes us to politicking and choosing leaders and all that. And I guess this falls more on the followers. Are the followers ready, to forsake the benefit of today to choose a good leader for tomorrow? I guess that's another question that comes up from this.
Yes, you are right. The problem we have is that, let me give you a good example. For every state governor, the first 3 years is when they are focusing on the job. The last 1 year is when they are focusing on politicking. And the point is that when you have the right caliber of people, the right leaders, the followers we are talking about, because it's the poverty. Now people are giving 1,000 hours to vote during election. And when they vote, after the vote, that is all, because they pay. But when we start telling our leaders, even in the National Assembly, then that whatever you have done there, you are coming back home, you are not going to vote you back there. And we start telling people that governors, when you don't perform, you are looking at, you can be appraiser. If you don't perform well, you are not coming back. So when you look at that, people will start thinking out of the box that, look, I'm going there to serve. How many of our leaders are serving genuinely? No. Some of them are selfish and self-centered. So that brings me to what the problem is all about. Because the ITR issue, making money for the state, is for the benefit of the state. And let me give you a good example. Government is a continuum. When you have a new governor, his predecessor must have done some projects, spent billions of naira on the project. And now you came in and you just forgot about the project. So that means the good people of that state, they've lost revenue, they've lost funds, they've lost capital, they've lost investment. They are starting another project. There's nothing wrong in continuing and finishing the project of your predecessor. So when you succeed a government, that is because of the way we are formed in this country, we don't do that. So when you come in as a governor, you forget and leave. But some of these governors are doing a very good job. I mean, look at what the guy in Rivers is doing. He's completing the project. And I'm impressed with Governor Abiodun. He's completing the project that is presented of Governor Mutu, which I was part of the government. He's completing some of the projects.
All right, Mr. Ashiru, we're really out of time now. But just in one sentence, what's your thoughts on the VAT tussle? Should states be collecting? Should it be federal government? What's your thoughts? We're almost...
Oh, I'll be honest with you. VAT is supposed to be collected by the state government. It's in the constitution. It is a statutory frame. But the problem is that it was the military that created the problem. The military created that problem because it's convenient for them. And now the federal government, when the civilian government came in, they didn't want to do that because it's comfortable, it's convenient for them. But the states are fighting it. You can see that the president is now actually going back to the assembly to make it a law. But the law clearly shows and states that VAT is supposed to be collected by the state government.
All right, so, Mr. Ashiru, we really have to thank you.
Anybody saying it's going to collect by federal government, the state government revenue is supposed to be collected by state government.
All right. Thank you so much, Mr. Bimbo Ashiru, former Commissioner of Commerce in Ogun State, for sharing your thoughts with us this morning. Very straight to the point thoughts there. Thank you so much. Enjoy the rest of your day. So we'll just take a break now, a very short break, and then we'll be back to go to FX Commodities Market. Do stay with us. It's Business Morning on Channels Television. You're welcome back. Well, the week-on-week summary of activities on AFEX Exchange shows mixed sentiment. While the volume traded for the weekend at 27th of December dropped, the number of deals were up. We have Femi Kende, analyst, structuring and origination at AFEX, joining us from our Abuja studio. Hello, Femi. Good morning.
Hi, good morning. Happy to be here.
Happy to have you here. So tell us, take us through the activities for the weekend at December 27th.
So it was an interesting week on the exchange. As the volume traded, the number of deals actually surged significantly. The total turnover for the week actually closed at 1.6 billion naira, which represented a 27% increase week on week. However, the volume traded on the exchange actually closed at 5.3 million contracts, which represented a 2.42 decline for the reported week. In terms of the number of deals, the exchange actually saw the execution of 233 deals, which represented a 70% increase. For the financial benchmarks on the exchange, which are the FX Commodity Index and the FX Export Index, we actually saw opposite movements in the two indexes. For the FX Commodity Index, we actually saw a decline of 0.24% to close the week at 448.78 basis points. However, for the FX Export Index, we actually saw a marginal increase of 0.26% to close the week at 193.36 basis points. For the volume traded across commodities on the exchange, maize and soybean actually had an amazing week, accounting for more than 90% of the volume traded on the exchange. In terms of commodities prices, maize, soybean, sorghum and cashew had a brilliant week. However, paddy rice and cocoa had a negative week. For maize, we actually saw a percentage increase of 5.09% week on week to close the week at 112 naira per contract. For soybean, we actually saw an increase of 1.3% to close the week at 396 naira per contract. For For sorghum, we actually saw an increase of 19 naira to close the week at 245 naira per contract. And for cashew, we actually saw the increase of 4 naira to close the week at 484 naira per contract. For paddy rice, the commodity actually declined by 19 naira to close the week at 186 naira per contract. And for cocoa, we actually saw the decline of 4.9% to close the week at 1,150 naira per contract. Pardon me. For more information about our report spanning the commodities market, you can actually check us on our website at www.afexnigeria.com, or you can follow our social media at Afex Nigeria or Comex by Afex.
All right, so there's a little bit of cross-referencing now, historical performance of staples with the current fundamentals in the market. What's your outlook for the first quarter of next year?
Yeah, so interesting question. So the key things we need to ask ourselves about the fundamentals driving the commodities market in Nigeria. The first thing is the volume produced in the country, has it significantly improved compared to the previous year? Consumption, has it improved compared to the previous year? And our political outlook or our policy outlook for the commodities market. Now, if you look at how the commodities market actually performed last year, you see that by the end of the first quarter 2021, we actually saw a significant increase in the price of staples for maize, soybean, paddy rice, and sorghum. Now, most of the reason driving this is over time we have observed that the level of consumption in the country cannot be entirely serviced by the domestic production in the country. So there has always been a need for importation to augment domestic production. However, the recent policy of the CBN to actually restrict the access of FX to the processing companies that actually need these commodities has actually restricted them to actually consuming what has been locally produced. Because of this, we continue to expect a demand pressure to actually push prices upward, ending the first quarter of the year at a high note.
And agriculture has, well, proven resilient, even though we've seen that the growth has been marginal. How can stakeholders fully unlock the potential, in that sector? So it's very interesting when you look at agricultural data over time in Nigeria. Over the years, agriculture has accounted for 1/3 of the employment in the sector, according to the recent employment sectorial data released by the MBS. So as a result of this, you actually have to think very well to see that agriculture actually has a potential in unlocking employment in the country, in lifting a lot of people out of poverty. However, the inflow of funds into the sector has been marginal. When you look at the spread of domestic credits to the sector, you see that it has averaged about 4 to 3% in the last 5 years. If you look at capital importation also, you see that it has averaged between 1 to 2%. Now, there's a lot that needs to be done to actually unlock the potential of the sector. Because even when you compare the yield of the sector, right, of certain commodities to the neighboring country, you see that the country is not actually doing or outperforming many countries that are close to us. So there's a lot of things that need to do in terms of the use of improved seeds, the use of fertilizer, the education of farmers, because according to our crop production report, we actually observed that a lot of the farmers that we interviewed are not properly educated on the right application of, or the application of improved seeds, the application of fertilizer, how to actually assess credits or timely credit that will actually be useful to them. So we need to do a lot of education of these farmers. We need to fill the infrastructural gap, because over time we've also observed that our annual the operational storage we have can only store about 4% of the annual grain we produce, which is actually not a very good thing. If you look at countries like South Africa and China, you see that these guys can actually store over 100% of their annual grain produce. So we also need to fill the infrastructural gap in terms of storage. We also need to fill the infrastructural gap in terms of accessibility from the farm gate to the commodities market. We also need to do a lot of value chain improvement and to actually stop the disruption of the value chain. So yeah, there are a lot of things we could do, and we have companies like Afex actually trying their best to actually improve the overall performance of the sector. But overall, I think the sector is doing well, but there's still a lot of things to do to unlock the full potential of the sector. All right, Femi Kende, analyst, structuring and origination at Afex. Thank you so much for giving us a breakdown on the market. Well, we'll do a review of activities. Good to have you. We'll do a review of activities at the FX Commodities, looking at the year 2021, and of course, including the company's successes and achievement, which meant a lot to Nigerian and the African market. FX will also be looking at the outlook. We have still from FX joining us now, Yusuf Ogumbi is the head structuring and origination, also joining us from our Abuja studio. Good to speak with you, Yusuf. Good morning.
Good morning. Good morning. Nice to be here again.
Good to have you here. Can you share with us some of your landmark achievements in the year?
Yeah, thank you very much. The year 2021 has been great, very important for us at AFEX. And for us, it's kind of like rounded a lot of things for us going over the next 4 to 5 years. First of all, we crossed the 300,000 benchmark for farmers we engage. We crossed 300,000 metric tons of storage capacity as well as a company, and we also crossed a number of key milestones. For instance, the number of engagements we have for input notes on the input note side for giving farmers input across the country also improved significantly. That's on the one hand. On the other hand, as the exchange as well, the volume of commodities traded on the exchange also grew significantly. We saw that we crossed the 500,000 metric tons volume traded on the exchange. And year to date, we are at around 120 billion naira traded on the exchange in terms of value of trades on the exchange. This has shown us that some of the strategies we've implemented over the last 1 year are beginning to bear the results we would like to see. We are doubling down on them coming into the next year.
And finance has been a major challenge in the space. FX is also leading, like you mentioned, commodities player. How has FX been able to make finance available? What difference has FX made in the area of financing in the agriculture sector?
Yeah, for us at AFEX, that's primary. As an exchange operating in the capital market, our major objective is to see how we can help to unlock funding, financing to the agriculture sector and other commodities markets as well. But for us, in the year 2021, just at the close of 2020, November 2020, we launched the first warehouse-backed commercial paper in the country and broadly in West Africa, if I'm not mistaken. And what we saw by that is that we're able to unlock significant financing to processors, and they were able to leverage on this instrument. Just like we've always done as well, we've also double down on our farmer engagement. We increased the volume of transactions to about 7 billion for farmers this year in 2021, which is pretty much able to cover over 100,000 farmers in terms of financing. And this for us is critical as we look at the demand and supply side of the market. In addition to that, we are also working on other instruments that would help to unlock financing for traders, exporters of these commodities. And this is because we realize that agricultural commodities such as cocoa, sesame, cashew, and ginger continue to remain a good source, a strong source of foreign exchange for the country. And if we are able to unlock the financing for exporters, we're able to get this foreign exchange into the country as well. So for us, it's a spectrum that we are working along from production right to processing. And we think that if we continue to introduce some of these innovative products going into 2022, we'll continue to see these results come out much more beautifully.
And in the third quarter of this year, you launched in Kenya. I guess that's part of your 10x target. So tell us the growth journey so far of 10x.
So 10x is a strategy that we have at AFEX, pretty much called the Project Black Elephant. And the target is to reach 10 times what we were transacting, the transaction volumes and our performance as at the year end 2020. And for us, expanding into Kenya continues to reflect our Pan-African dream. We have a Pan-African dream, and we believe that our mission is we believe that we are crazy enough to feed Africa. And if we have that kind of belief, I I think it's just obvious that we'll be expanding into other African countries. Kenya is one of the largest economies in East Africa, and we think with us here in Nigeria and Kenya and some other countries we'll continue to see, we'll be able to achieve that dream. If you look at the East African market, Kenya is critical to other markets. You have Uganda and the countries surrounding Kenya. You realize that commodity movements between the East African nations is actually, some of them emerge or emanate from Kenya. And us being present in Kenya, we are able to deploy the knowledge we have. We are able to learn the Kenya market as well. We are able to adapt some of the technologies we've developed in-house here in Nigeria. And we're able to get this job done on a larger scale. For us, it's the 10x dream is real, and we are marching towards it strongly.
All right, so just before we let you go in just a sentence or so, what should we be looking ahead from IFEX in 2022?
Quite a lot. Like we mentioned earlier, we'll be looking at the Food Security Fund coming up in 2022 fully. We'll be looking at the derivatives market coming up in 2022 fully. We'll be looking at significant expansions as well into other markets. And then we'll be looking at some other products that will be releasing on IFEX to help stakeholders in the market achieve their objectives. 2022 will be a big year for us. We'll be launching fully into the financial market, and we would like the participation of all stakeholders as well to help us achieve these objectives.
All right, Yusuf, you have a full calendar there, and I'm sure we'll be right here to give the information to our viewers out there. Thank you so much, Yusuf Ogumbiyi, for being a part of the show, and wish you all the best in your aspirations for 2022.
Thank you very much. Thank you very much.
We'll just take a moment. When we come back, we'll do an opening call to the market. Welcome back. Well, the market resumes today, but I think Will has something different to tell us just before we get the activities from the markets today. Good morning, Will.
Yeah, good morning, Ini.
Hello.
Before we jump onto the activities that's going to resume today, last week we saw the bear dominate activities at the NGX. And it is interesting to see that investors weren't taking a risk-on feel as profit-taking persisted, and that led to the market to a negative close for the market last week. It was down 0.21%. That's for the equities market. And we're hoping for a turnaround trade as the market resumes from holiday today. Nevertheless, as the year draws to close, yield-seeking investors are expected to take positions in stocks with attractive dividend yields. And now to the bond market, not a whole lot of action to note there from last week's transactions. We've been seeing very, very small moves as activities are still pretty much quiet because of the Christmas holidays. And we saw again last week the DMO had a successful outing with a 250 billion naira Sukuk bond it offered, as it was oversubscribed by about 346%. Also, last Wednesday, the Senate passed the 2022 budget of 17.12 trillion naira after increasing initial estimates by over 700 billion naira. The lawmakers also increased the oil benchmark price from $57 to $62, and to quote, to reflect the current market value of the oil barrel in the international market. However, the budget has a deficit of about 6.25 trillion naira, slightly above the 3% ceiling set by the Fiscal Responsibility Act. Now, to talk about this, we have Caleb Alimi, fixed income dealer, FSCH Merchant Bank. Good morning, Caleb. Caleb, are you there? Good morning.
Yes, I can hear you. Good morning.
Caleb, we're just talking about the budget, and we saw that yesterday the president signed the 2022 budget into... Are you there, Caleb?
Yes, I can hear you. I can hear you loud and clear.
Okay, the president signed the budget into law yesterday. 6.25 trillion naira deficit is expected to be financed by new borrowings. So what do you think is the borrowing strategy here?
Okay, thank you. Typically, the government will look to finance the deficit through local and foreign sources. So for the local, they'll probably do it's a 50-50 funding strategy, 50% local, 50% offshore, which would include borrowing from multilateral arrangements, bilateral creditors, amongst others. And then for the local, it would be strictly from the bonds market and partly the Nigerian treasury bills as well.
Okay, so also we see that there's There's a treasury bill auction going to happen today. About 52.7 billion naira on offer. How do you think investors react to this auction, which is the final one for the year?
Oh yeah, the last auction for the year. You should go out with a hooray. Last rates have dropped to around 5.15 levels. We expect that this one would also be around the same levels. I don't think the demand will be too strong, but I do expect that the government will be able to raise the total of the 52 billion that they have on offer. But we expect the rates to be around the same 5.15 levels as we bring the year to a close. Most investors are already looking forward to next year, fresh borrowing program for next year, higher deficit than last year, than this current year rather, and so higher rates are expected next year. I think the focus is already on next year. We'll see probably a decent bid at this auction for around the 5.15 levels or slightly higher.
Okay, so let's talk about the OMO auction. I mean, the OMO maturity, which is due tomorrow, that's Thursday, and the possible auction that could take place. How do you think this is going to affect the liquidity in the system?
Oh wow! For the OMO auction, in the last 2 weeks, there's been no OMO auction. There's been about 40 billion maturity for the 2 weeks ago, and then 45 billion last week. This one we expect about 60 billion in maturity. Hopefully, there will be an OMO auction. We expect, because there's a dearth of securities in the market. Banks are looking to plug some cash. Some FPIs are also looking to buy the OMO papers because that's where you can get decent rates around 10% levels. So we expect, we look forward to seeing what the CBN will do tomorrow. Possibly there will be an OMO auction at 10% levels for the longest paper.
How's that going to affect liquidity? What do you think liquidity is going to be like for the rest of the year?
Oh, liquidity for the rest of the year is actually choppy. It's been a very tight interbank market. That's due to FX auction that just happened last week. CIR debits amongst other outflows, other funding outflows. So liquidity is still going to be a bit choppy till the end of the year.
Okay, so some analysts are still expecting a quiet session for this week, but we're hoping that today's trade is going to be maybe increase investors' appetite in the market and probably just raise that weak projection we've been seeing. So thank you, Caleb, for your insights on the program. Caleb Alimi,
you're welcome,
fixed income dealer at FSCH Merchant Bank. Thank you so much. So, Ini, that is what we're seeing in the market today. We're hoping that the market resumes today from the holidays, that we're going to see a turnaround in trades. We're going to see probably investors taking on more positions, probably ahead of the new year, and then we'll see more investments, boosting the market up for a little bit. Yeah,
I was certainly looking forward to that, especially when we see that it's just about, is it 2 or 3 days before another holiday, and then before we get fully into the year 2022. But yes. I'll be on the stock market report, so I'll be looking out for the figures later on today. Thanks, we all. No. So I will take another break now. When we come back this time, we'll do an opening call to London. To stay with us is Business Morning on Channels Television. Welcome back. You're still watching Business Morning on Channels Television. Now, with a record of over 100,000 infections of COVID-19, and then the Prime Minister Boris Johnson saying that there are no, at least immediate plans to reintroduce restrictions, I wonder how much personal efforts are to stay safe. Well, we have Juliana back in the studio now, I believe, joining us after the bank holidays to bring us up to date. Hello, Juliana. Good morning. Good to have you back in the studio.
Good morning, Annie. It's nice to be back.
Yeah, well, the figures are really going up, and the Prime Minister, I guess because of economic reasons also. But when we look at individuals, would you say you've noticed any more consciousness to stay safe and, deal with this surge in the numbers of COVID-19?
Well, as you said, the COVID infection rate in the UK is record-breaking. I believe the latest figures we've got from the Office for National Statistics show that well over 130,000 people tested positive for COVID-19. We know that Omicron is now by far the most dominant variant here in the UK. And if you look at the statistics and the data, it does show that people are being more cautious. I think the biggest data that's being flouted around at the moment is Boxing Day figures. We know that before Black Friday, Friday was transported here from America, Boxing Day sales were really the prime shopping day for people to go and grab some discounts. And according to Springboard, it showed that it was 50% lower than pre-pandemic levels. This is a footfall, the amount of people that are going into high streets, deciding to go into restaurants. And there are a lot of factors at play here. I think obviously the predominant factor is Omicron and the fact that so many people are sick or having to self-isolate at the moment. Also as well, Ini, you can't be in the UK and not talk about the weather. It's been pretty terrible over the past couple of days. It's very wet and windy. When it's wet and windy, this does affect transport. Lots of main lines coming out or coming into London have been affected. And not only are they affected by the weather, they're affected by staff shortages. So no, it is quiet. And then we've got to bear in mind as well that we are legally under Plan B. So even though we don't have restrictions in England that are as tight as what we're seeing in the other devolved administrations in Northern Ireland, Wales and Scotland, we are still under some COVID restrictions, which is Plan B. So millions of people are being asked legally to work from home, which means lots of restaurants and coffee shops are not at their capacity at the moment because they just don't have the people coming into the high street. So that was the long answer. But the short answer to your question is yes, we are starting to see that this guidance given by the Prime Minister and the government is taking effect.
All right, and then a think tank is already calling 2022 a year of the squeeze. Now, what do they mean by this, and what are reactions to this?
Well, yeah, this is the Resolution think tank. They've released their latest labour market quarterly outlook, and it's pretty bleak. Of course, as you can imagine, all the mainstream media are running with this in the UK. They predict that Omicron is unlikely to be the economic factor going into 2022, but it's going to be the fact that inflation is skyrocketing and pay is stagnating. We're expecting April next year to be the peak of household woes. This is because we know that Ofgem, the energy regulator, is likely to lift that cap on household bills. It's expected to be lifted by about £500 a year. That's a lot of money, particularly for those on low incomes who already spend about 12% of their wages on trying to heat their homes and cook their meals. That's going to be a problem already, even with interest rates rising to 0.25%. Inflation is running at 5.1%. We're expecting that to hit about 6%. So what you've got is, higher prices and lower wages. That's going to be a real issue, particularly because we know as well the national income NI tax is going to rise, corporation tax is going to be increased. So it's not looking great. Not great headlines going into the new year, unfortunately, provided by the Resolution think tank early this morning.
Yeah. Well, we'll get through it. We'll also talk to you later at 1:30 during Business Incorporated.
Thank you.
So now let's switch over to the cryptocurrency market, and I hope the think tank forecast is not affecting that market, Laddie.
Well, it could be because we're having quite a red market. We've seen Bitcoin lose the 50K level. It's double-digit losses for altcoins, so it's not looking pretty in the crypto market today. But Bitcoin still, seems to be ranging between the 47,000 and 52K level. We see market cap now, $2.25 trillion is down 3.14%. 24-hour volume traded, $94.71 billion in the total crypto market. We see volume keeps going down at this period. Bitcoin dominance, 40.24%. Price of Bitcoin this morning, $47,822, is down 2.83%. 24-hour volume traded in Bitcoin, $29.46 billion. So at this time, we're witnessing a decoupling of Bitcoin, from traditional markets like the S&P. Normally, for past a few weeks, we've seen Bitcoin and the S&P run, at the same rate. If the S&P goes down, Bitcoin goes down. But at this time, Bitcoin is going down on its own. Price of Ethereum, $3,800 is down 3.10%. Volume traded in Ethereum, we see volume declining in that corner too. It's $15.29 billion traded this morning. Let's look at the top also market cap. It's not looking pretty there. It's all red with Solana, $176, the biggest loser there, 7.73%. And XRP still holding up pretty okay at 85 cents, down 3.91%. And we see BNB there, $535. BNB, well, a report shows BNB is the best performing cryptocurrency on the top walls by market cap there. It's been up 1,300% this year. It's down 2.46%. It's had an incredible run this year. Cardano, $1.42. It's down 2.49% this morning. Top 5 gainers there, we see IOTA there. $1.46. It's up 9.59%. And we see that rose 38 cents, up 9.43%. And Phantom doesn't seem to be stopping this year. It's $2.34, up 7.22%. Blockchain DAG there. We see Leo, $3.67 is up 6.69%. And we see a live peer there, $44, up 6.58%. And I see it's not looking pretty at the top losers counter there. Let's bring in Gilbert Jopata now. Hello, Gilbert. Good morning.
Yes, good morning, Mr. Lamy.
Yeah, so we've lost this 50K psychological support. What's next?
Nothing has actually changed. We have been range bound, but a couple of investors keep looking at the smaller time frame. So once you keep looking at the smaller time frame, you will always be caught off guard. When we move towards that above 50K, we needed to break above that for us to know that we are broken out of that range. So as long as we are still in that range, the downside risk is not completely eliminated. So it is normal for us to see this retracement. But once we get into a resistance zone, most people always expect a breakout. So that is why there was a psychological mindset towards the new 50K zone. But as long as we had not broken that, we expected this potential downtrend, which is taking place. But as long as we are still range bound, it's possible we are testing 44 or the present price is going to hold. Other than this, this price will still range for a while. So since the downside risk is not out, before a macro continuation is going to come into the market on the bigger time frame.
All right, Gilbert. Well, I'll be watching the other supports to see how they hold. Thank you so much, Gilbert.
You're welcome.
Yeah, so we're seeing ICX, the icon there, double-digit loss there, down 15% this morning. Kusama, $296, down 9%. We see Aave and Cadena there, down about 8%. So, it's not looking pretty this morning in the market.
Well, I think it's just maybe it's profit-taking because the year is almost over, and then by next week we should see the market bounce back.
Yeah, 2022 would be quite interesting.
Yeah, very interesting.
One to watch.
All right, Ladi, thank you so much. And that's it on the program. Thank you so much for being a part of this midweek edition. We'll continue tomorrow on Business Morning. I'm Ini John Mekwa. Please do remember to join us at 1:30 during Business Incorporated. We'll bring updates from the world of business at that time.